when you realize in a bank, you don't actually own your money. And people are now realizing that. And the Treasury and the Fed are like, we'll just pretend that it's okay. That drives people into this parallel financial system. I got into Bitcoin in 2013 for exactly this reason.
The banks take your money and make money off of your money while only giving you 0.001%. If you look at all of the bank's balance sheets, most of them hold less than 1% of the money that they actually have in the bank. This is due to fractional reserve banking, and people are starting to understand how corrupt this system is. You should start looking into things like Bitcoin to learn how to opt out. Hey crypto family, welcome back to the channel. If you didn't know, this is Raoul, the CEO and co-founder of Real Vision. In today's video, he'll be discussing the recent bank news that we've seen with banks failing here over the past couple of weeks. He also gives his updated price prediction on Bitcoin and some other crypto assets, and he talks about why Bitcoin is going to be important while these banks continue to fail. He gives some gems in this interview he did recently, so you should definitely check it out. Let's go ahead and play the clip. Like the video if you find any value. Let's go ahead and check it out here.
So, generally speaking, over time, the observable relationship, because it's a 97.5% correlation between the G5 central bank balance sheets and the S&P 500, is every time it grows by 1% or shrinks by 1%, the equity market moves by 2%. So we've got a clear relationship. And so, I don't know, we just increased the balance sheet by whatever it was, 5%, let's say. So therefore, equity markets go up 10%. That's roughly how it works. However, NASDAQ goes up at a multiplier of about 1.4 times the S&P because it's got a technological uptrend, and it's probably accelerating as AI, robotics, and all of these things come in. And crypto's got a much bigger multiplier. So let's go back to the last time we saw this, which was December 21st, 2018. The Fed just stopped and said, right, we're not going to increase the balance sheet. We're not going to raise rates any further. Not going to decrease the balance sheet. Not going to raise rates any further. Over the next 6 months, crypto was up 300%. So Bitcoin did 300 and something percent. The exponential age stocks, which are the really kind of growthy ARK style stocks, they were up about 30%. The NASDAQ was about 22%, something of that magnitude. The S&P was about 15%. And so we can see that relationship happens. So my view here is I got into Bitcoin. So assets will go up according to the balance sheet. I think the balance sheet goes up significantly, 30% plus over time. Therefore, the equity market can go up 60% in the S&P, maybe more. So new all-time highs in the next 12 months or so, maybe a bit longer. NASDAQ gets there sooner because of its relationship. Crypto moves very fast. I got into Bitcoin in 2013 because I lived the European banking crisis and obviously the financial crisis. But the European banking crisis was very similar to what's happening now. The local bank in the village that I went in went under and took everybody's deposits. They bailed them in. We had a run on deposits, liquidity issues. They were invested in things that were illiquid, which was real estate. Real estate market had come under pressure. Very, very similar. Too many small banks in Europe. And so Draghi backstopped the whole lot. So I saw this and I realized that there was no trust in the financial system. Nobody knew who owned what when Lehman went under. And they were terrified of others going under because of the same issue, because the daisy chains of collateral are everywhere in this market. And then when you realize in a bank, you don't actually own your money. And people are now realizing that. And the Treasury and the Fed are like, we'll just pretend that it's okay. That drives people into this parallel financial system. I got into Bitcoin in 2013 for exactly this reason and have been an active participant of the market ever since. And so I think what Balaji is saying is, listen, guys, here's the life raft. You can take it. Now, Bitcoin's relationship with the Fed balance sheet is really interesting because it goes up exponentially. So if I look at it versus M2 year on year or the Fed balance sheet year on year, it massively outperforms in the bull market and then pulls back when the liquidity comes out of the system again, but it keeps going up. So yes, I think there is a potential setup here for Bitcoin and the whole crypto market actually to be shockingly strong, more like 2013 than 2019. 2019, we had that big correction, and that was partly due to this G5 central bank balance sheets. Some of them were contracting over that period of time, and it pulled back the crypto market. This time around, I don't think we're going to see that. I think we're going to see all of the central banks falling into place because there's banking issues both in Europe and the US, and China has its own issues. So that they've all got the same issue, which is debt. They're all going to have to stimulate. So I think it's more likely to play out like 2013, which is very squeezy, then sideways consolidation, then very squeezy. Because, you know, every time we go through these cycles, more and more people understand what the benefit is of Bitcoin. And now we've got 300 million people that have used Bitcoin and other crypto. The next time around, it'll be 1 billion people or 600 million people or whatever the number is. And those people will have been awoken to the fact that there is another way out of this. Now, the issue is, as we all know, is Bitcoin is extremely volatile. So it's very hard to think of it in terms of, well, it's a wealth preservation asset because people's mind time horizon is too short. But if you hold it long enough, it does extremely well. It does better than the Fed balance sheet, better than any other asset in existence. But people get freaked out by the up and down move. But if they just zoomed out, they see it does a phenomenal job at opting out of the financial system over time. But, you know, maybe you need to keep liquidity and other stuff for when you need it, as opposed to the crypto cycle, which can be quite vicious. So at a top level macro position, I haven't cashed out of a single penny of crypto. And all I've done is use the cycle when the liquidity cycle hits the long-term uptrend that started happening in June of last year to just add to my positions. That's all I've done. Now, there are some trading opportunities around like bonds, because I think bond yields go from 4% to 1.5%. So can you make money? Will you make more money in crypto? For sure. But people don't want the risk, and people are such dicks online about the kind of risk you have to run to do it, that yes, there's traditional answers. You could buy gold, you can buy bonds, you can probably buy technology stocks, or you can buy crypto. And you skin the cat any way you want it in terms of what risk profile. And I've talked about my risk profile is, you know, I have income, I have assets that are paid for, so I can take more risk with the liquidity that I have. You know, I don't do VC because I don't like a 13-year payout. I like to be in control. I'm a hedge fund guy at heart, so I like to be in control of my liquidity. And so I haven't changed anything at all in terms of my asset allocation, apart from increasing it and using the leverage. So why am I doing this? And this is really important for people to understand. So I first bought Bitcoin at $200 in 2013. It went straight up to $1,000. And I'm like, I'm clearly George Soros. I'm the best investor the world's ever seen. 500% in 3 months. I'm a genius. It then falls 87%. And my time horizon was like 5 years plus. So I'm like, well, probably 10 years. Because I wrote that first ever macroeconomic strategy paper about Bitcoin in 2013. So I said, okay, fine. So it's a call option. I'll let it go up and down. So it fell, didn't do anything, watched it. It rose 2017. I got confused over the staking wars, the forking wars. And I'm like, I don't know what's going on here. I'm going to take my money out. And I sold out at something like $2,000. So I've made 10 times my money, one of the best bets I'd ever made, and watched it. Now, I was still interested in crypto, but I thought it was in a bubble, and it was. It shot up 10x more to 20,000, then collapsed 85% or 82%, whatever it did that time around. And then I bought it again really well in kind of April 2020 when it fell into the middle of the wedge pattern. I bought it right at the right level. You know, I didn't get the absolute low, but let's say I got in about 6,500, and then I put in a much bigger bet than I did first time around, and great. So I went back recently and looked at it and thought, What happens if I just kept my original $200 in its original size? Because it looked like I traded it really well. I bought it here, I sold it here, and then bought it there. Problem is the here's and there's were all higher because I sold at 2,000 and bought back in at 6.5. I fucked the whole thing up. Really, if I just held it, I'd have made 5 times as much money. And then the real magic unfolded is if I'd used the liquidity cycles and bought them every time we've had that kind of M2 fall down, M2 growth fall down, global M2 growth, bringing it back to the long-term uptrend. Had you just bought then, i.e. the crypto winters, even if you just missed the low by 30%, maybe more, I still would have done over 20 times better. Even accounting for the fact I put a lot more in April 2020. So I've learned, many of us are having to learn how to trade a exponential asset that's in a logarithmic uptrend that is cyclical. But that's how I just deal with it now. I just use that simple framework. Is the adoption going on? And where are we in the liquidity cycle? And just use that.
If you like that video, make sure to subscribe to the channel. We have new Bitcoin, crypto, financial related content coming out every single day. Make sure to hit that like button if you found any value in today's video. Thank you guys for watching all the way to the end of the video. My name is Aaron from the Bitcoin Bros. I'm out. I'll see you guys in the next one. Have a great rest of your day.